Hello traders, you're welcome to this video. You're welcome back to the Forex Geek channel. In this video, we are going to be diving into one of the most straightforward techniques for spotting potential trend reversals and getting precise entry and exit points. So specifically, we are going to be looking at the stochastic crossover strategy. I'm just going to be inserting the stochastic oscillator to the chart right away. All right, here we go. So if you are looking to take your trading skills up a notch and add a bit more precision to your trades, then this video is for you. Okay? Before we start, make sure you hit that like button, subscribe, and tap the bell icon so you don't miss any future videos packed with valuable Forex tips and strategies. Alright, so let us jump right in. We're just going to be starting with the basics. The stochastic oscillator is a technical indicator that helps us gauge the momentum of price movements. It operates within a range of 0 to 100, as we can see, where the 80 level is considered overbought and the 20 level is considered oversold. Now, the main idea behind using stochastic crossovers is to look for momentum shifts that could signal a potential trend reversal. So how does this help us as traders? First, a quick refresher on how the stochastic oscillator works. It is made up of two lines, as we can see. Obviously, we have the percentage K line, which is this green line, and we have the percentage D line, which is this dotted red line. So the percentage K line reacts faster to price changes, while the percentage D line is a moving average of the percentage K line. So the crossover between these lines is what we focus on when using this strategy. Now, to set up this indicator, you need to open your trading platform. This is the MetaTrader 4 platform, by the way. So whether it is MetaTrader, TradingView, or any other platform that supports technical indicators, you need to, of course, add on the stochastic oscillator to the chart. You go to your indicators section, you search for stochastic oscillator, and you apply it to your chart. Then you set the parameters to the default settings, or if you want a more sensitive signal, you can adjust the period based on your trading style. For beginners, I recommend sticking with the default values initially. Okay, now this setup gives us a reliable indication of overbought and oversold conditions in the market, which is exactly where we want to focus for potential reversals. So how exactly do you use these crossovers? Let us break it down. All right, a bullish crossover occurs when the faster percentage K line, which is this green line, crosses above the percentage D line, which is this dotted red line, okay? While both lines are in the oversold region, below the 20 level. This suggests that momentum may be shifting to the upside, and it could be a good time to consider entering a long position. On the flip side, a bearish crossover happens when the percentage K line crosses below the percentage D line, while both lines are in the overbought area above the 80 level. This crossover signals that momentum could be shifting downward, potentially signaling a good exit or short entry. That is an exit for a buy trade or a short entry. Okay, so now let us just briefly look at a good example. All right, we're just going to be looking at both a buy example and a sell example. So we can see a buy example here. We had a bullish crossover as the stochastic was just coming out. The stochastic touched the oversold territory just for a bit, and then we had a bullish crossover. So we can see that right after that crossover, we would have considered entering a buy and then setting stop loss below the swing low. And for the take profit, we can decide to wait until the stochastic enters the overbought territory and a bearish crossover occurs. All right. You can also use other indicators to confirm your exits. Okay, and you can also use support and resistance zones. These are very important zones which are necessary as a trader or for a trader who uses technical analysis. All right. And then now let us look at the sell opportunity. We can see here that we had a bearish crossover, we had the percentage K line cross below the percentage D line in the overbought territory, and then shortly afterwards we can see how the price dropped significantly. So we would have considered entering a sell trade somewhere around here, and then we could have set our stop loss just right above the swing high, and then for a take profit we would have waited for the stochastic oscillator to get into the oversold territory and then make a significant upward move or a significant bullish crossover. All right, so we should have probably exited our trade somewhere around here, all right, where we had a bullish crossover within the oversold territory. Okay, this was almost immediate, so let's just say we would have exited around here. Okay, we would have exited around here, or you can use support levels to examine your exit, or you can also add on other indicators to determine your exit or to confirm your exit. All right, so here are a few pro tips for using the stochastic crossover strategy effectively. Tip number one: avoid trading solely based on one indicator. This is crucial, okay? While the stochastic oscillator is powerful, it works best in combination with other indicators, such as moving averages or support and resistance levels, as you can see on the chart. All right, okay, because these are going to help in confirming potential reversals. Now, tip number two: be cautious in strong trends. In a strong upward or downward trend, the stochastic oscillator can stay in overbought or oversold regions for long. Okay, all right. Now, to recap, the stochastic crossover strategy is a fantastic strategy for spotting potential turning points in the market. By focusing on crossovers in the overbought and oversold zones and aligning them with the current market trend, you can get solid signals to improve your trading accuracy. As always, remember that no single strategy is foolproof. Make sure you practice on a demo account if you're new to this technique and see how it fits your trading style. And don't forget to incorporate other indicators for confirmation. If you found this video helpful, please drop a like, subscribe to the channel, and turn on notifications for more trading strategies. Thanks for watching. Subscribe for more Forex strategies. Until next time, stay profitable. Happy trading.